Hey everyone, welcome back to my channel. I hope you're all doing well. So, the last 10 days in the market have been pretty choppy, and although some areas are recovering, there might still be some buying opportunities. However, if your funds are in a Roth IRA or retirement account like mine, you know it's hard to buy the dip because you just can't add money so freely like you can a taxable brokerage account. And usually, retirement accounts don't have margin. So, it's hard to leverage money to buy the dips in these types of accounts. So in this video, I'm going to tell you what I'm doing in my Roth IRA and my action plan during the market dip. And I'll start by briefly talking about the portfolio performance and my plan for the next 2 weeks. Okay, so starting with my dividend rocket strategy, I'm using high yield income ETFs to generate income and buy more shares of my core holding, SCHB, which is a broad market ETF. And if we look at my first position, HOOW, it paid a lot of dividends in the last 6 weeks, about $908 total. And the total profit combined with capital appreciation is about $3,000. Now, I did sell this on October 6th because it ran up so fast. And, I was looking for a dip in September and it never happened. So I thought maybe there might be some market correction sometime in October. So I did sell this fund or this portfolio position. I originally bought in around $65. So you can see when I sold it, it was about $84. So I think it was good that I took this risk off the table. And with that money, with the profit from HOW, I did slowly build a position in WPAY. Now, what's really nice about high yield income ETFs is they generate income within the portfolio. And if you look at my distributions from October 7th to October 16th, I received a total of about $427.26, which you can see why I have high yield income ETFs in my portfolio because I can't add money to the account. So I'm generating income within the account. And I think this is really helping me during the market downturn right now. So if we look at my portfolio value, you can see that in August, I had about $14,000. In September, $16,500. And you'd expect with the market downturn that my portfolio, especially because it has high yield income ETFs, would, also take a dip or be in decline. But you can see that the portfolio value is still higher than September at about $17,000. And remember, it's largely due to the distributions. You can see that the dividends or distributions have been pretty good each month. Now, if we look at the individual holdings, and this is probably the biggest reason why my portfolio is still doing pretty good, is that my main holding, which is SCHB, is a broad market ETF. So it doesn't go up and down as much as other ETFs, especially high yield income ETFs. And if you look at the dividends, yeah, nothing to write home about. But the capital gain is still about 23.5%. And this is during a market dip, right? So this is why I think SCHB and growth funds do pretty well in a Roth IRA in the long term. Now, if we look at my high yield income ETF, WPAY, remember it's a new position. I'm still building it. I did receive one distribution for about $113. So I imagine that if the NAV doesn't drop too much and I keep receiving these distributions, then I'll have a total positive return. Now, if we look at my last position, this is the one that's been getting beat up a lot because crypto and blockchain technology, the whole crypto space has been really impacted. So in capital gain, I'm down about 14%, but with the distributions, the total return is only negative 3.5%, which is not bad. And I'm going to keep holding it until the end of this year because I think the dividends are pretty good, and I don't see Ethereum going anywhere right now because there just seems to be so much enthusiasm for Ethereum right now. So we'll see. I could be wrong, but right now my portfolio is doing okay. And if we look at it from a macro view, you can see that it has dipped, but compared to the S&P 500 and granny shots, it's still doing pretty good. Okay, so thinking about my action plan for the next couple of weeks, I think you should just, well, not you, but me, I'm going to stay invested because I do think that there's a Santa Claus rally coming, maybe sometime in November, December. I don't know when it'll start. Plus, there's a lot of influx of capital towards the end of the year because people are getting bonuses, or, I think it's human nature to procrastinate. And I feel like investing sometimes is like that. Maybe people didn't invest a lot of money during the first half of the year, so they want to make up for it at the end of the year. So I think there's going to be a lot of money going or coming into the market towards the end of the year. And I still think there's a lot of money in money market funds. So that might have some kind of impact. Also, a lot of people have taken a big loss, and they might be selling some of their funds for tax loss harvesting, and they might be redeploying or reinvesting those funds into some other parts of the market. So I think for these three reasons, I'm going to stay invested, but into high conviction, plays. Now, if we take a brief look at average returns by month, you can see that September was supposed to be historically a down month, but we didn't get that. It actually happened in October. But if we look at November and December, they look pretty green, and I think some research says that November is usually a pretty good month historically in the year. Um, so I don't know if it will be positive, but I did watch a podcast, or not a podcast, but it was a show on Fundstrat on YouTube. And Mark Newton, which is a part of Fundstrat, you might know that company because Tom Lee's in that company. And he says that, yeah, he also believes that the market will reach all time highs, but before it reaches all time highs, there might be some kind of market correction. So I do imagine that there is going to be probably another dip. I don't know if it's going to be as big as the one that's happened in the last 2 weeks or as big as April. But I think a lot of people say that before anything reaches all time highs, it usually needs to take a little dip or cool down. So, like I said earlier, I'm going to stay invested in high conviction plays and maybe take a little bit of risk off of sort of high beta names. Well, that's it for this video. If you got some value, please like this video and subscribe to watch more free content on achieving financial freedom and living in Asia. And for my next video, it's going to come out around November 5th. That's going to be episode 9. I can't believe I'm already on episode 9. I have 3 more episodes to film before the end of the year. But I'm going to talk about how I'm preparing for the end of year rally. So I hope you stay tuned for that video. Thanks again for hanging out. See you in the next video. Take care. Peace. This video is for entertainment purposes only. It is not intended as financial advice. Consult with a qualified financial advisor before making any investment decisions.